watching the latest news from financialmirror.tv. US employers cut payrolls at the steepest rate in 5.5 years during September, slashing a higher than expected 159,000 non-farm jobs as employment contracted for a ninth straight month. The unemployment rate remained at 6.1%, but economists at Goldman Sachs expect that figure to rise to 7% by the end of 2009. September's cuts show the decline in employment is accelerating, while the average workweek in manufacturing was the lowest in 3 years at 40.70 hours. The report will likely increase pressure on members of the House of Representatives to vote late Friday for the $700 billion rescue package for banks and other financial firms burdened by bad mortgage-related assets, which is contributing to spreading credit crunch. World stocks fell to a fresh 3-year low on concerns the bailout would not be enough to prevent the US economy and that of the rest of the world slowing further. The only good news on Friday was that Wells Fargo, one of the strongest US banks, stepped in to buy troubled Wachovia Corporation without government help 4 days after Citigroup also said it would buy Wachovia. A recent rush of weak data suggests the US economy has entered a recession, and that the Federal Reserve will need to slash interest rates this month. Antipathy toward Wall Street helped sink a bailout plan on Monday, but it is clear that Main Street is suffering more amid a growing tide of joblessness and a factory slowdown. Fed Chairman Ben Bernanke said that if credit markets are not functioning, jobs will be lost, unemployment will rise, more houses will be foreclosed upon, GDP will contract, and the economy will just not be able to recover in a normal, healthy way. Futures markets show a 90% chance that the Fed will lower the benchmark federal funds rate to 1.5% this month from its current 2% and possibly further to 1.25% in December, which would be the lowest rate since August 2004. Economists at Goldman Sachs said they expect the recession slightly worse than in 1990 and 2001, but not nearly as bad as the 1973 and 1981 slumps. Factory orders sank 4% in August following dramatic declines in car sales due to the inability of many Americans to obtain new loans. Retailers are also bracing for a weak holiday season, even assuming that they can obtain financing to stock their store shelves for the typical buying rush. French Prime Minister François Fillon said on Friday the world stood on the edge of the abyss, gripped by a global financial crisis now threatening industry, trade and jobs worldwide. Prime Minister Fillon, whose country is hosting an emergency summit of Italian, British and German leaders on Saturday, said only collective action could solve the financial crisis. ECB President Jean-Claude Trichet sounded an alarm on Friday's expected vote in the US Congress, saying that Treasury Secretary Henry Paulson's plan must be passed. Worries grew that even if Washington agrees on the package, it will not be able to resolve deeper-rooted weakness. Divisions have emerged within Europe over the past week, with Ireland offering guarantees on bank deposits, prompting a flight of capital from British lenders to Irish banks, and Greece promising to safeguard savers' cash. Governments in Germany, Britain, Belgium, the Netherlands and Luxembourg have ridden to the rescue of banks in the past week, using state funds to take full or partial control to restore confidence in ailing lenders. Britain's services sector contracted in September at its fastest rate in 12 years as new business crumbled, confidence fell and the pace of job shedding increased. The figures suggest Britain's economy is dangerously close to recession, if not already in one. Nevertheless, market reaction was muted, with investors already convinced that the Bank of England will cut interest rates next week. The services sector, which spans banking to cafes, makes up around 3/4 of the economy and since May has been below the 50 mark that divides growth from contraction. There was particular weakness in the financial services industry, while a sharp drop in both new and outstanding business forced employers to cut jobs for the 5th consecutive month. Some good news came from the government decision to guarantee savings of up to £50,000 from next week as regulators battle to restore confidence in the banking sector. The Financial Services Authority raised the compensation limit after bank customers started withdrawing cash to put into perceived safe havens. Germany is better equipped to cope with the global financial crisis than it would have been several years ago, thanks to a series of government economic reforms, according to President Horst Kohler. In a speech marking the 18th anniversary of German unification, the former managing director of the IMF said the economy was on a sounder footing now after 5 years of painful reforms to cut unemployment and put public finances in order. In May, Kohler had complained that banks taking on risky investments without adequate risk provision had turned the world's financial markets into a monster that must be tamed. He had also called for stricter banking rules and the setting aside of more capital to cover financial investments, as well as using the IMF as a watchdog to monitor the international financial system. British retailer John Lewis reported on Friday an 8.3% drop in weekly sales at its department stores, saying the turmoil in financial markets and good weather conspired to keep customers away. The employee-owned group, seen as a barometer of Britain's retail sector, said sales also fell 0.7% at its upmarket Waitrose supermarkets. Despite the weak performance, John Lewis said it was continuing to take market share. It also said sales of fitted kitchens, large electrical items and flooring performed strongly amid signs that Britons are choosing to improve their homes rather than moving. On Thursday, Marks & Spencer reported its worst quarterly underlying sales performance for 3 years, and fashion label Ted Baker said recent trading had been hit by financial market turmoil. Thank you for watching FinancialMirror.tv and have a nice weekend.